Alrighty, how you guys doing? It is Sunday, 5:30 p.m. About 30 minutes before market open. So, for today's video, I'm pretty much doing something, I guess, a little bit more in depth, a little bit different. Something I guess I really haven't done too much of. Um, I'm gonna be going over the delivery of Friday. I believe I already covered all of the other individual days leading up into the weekly close, which Friday would have been the last day that I would need to assess. So, what I will do is go over the individual assessment of all three of the indexes that I primarily look at within the futures market, which is NQ, ES, and YM. Now, I've already marked up all of the Friday ranges for all three of these indexes just to make it a whole lot easier on this call, um, on this video, so I don't have to, go through all of the charts and mark up everything individually. You can see what my markups are on TradingView, and or copy any particular levels that you see on my chart and, use it for your individual study when you go and look at these days for yourself, or this day in particularly for yourself, because I'm not going over any of the individual days that I've already covered. Just going to keep it pushing and moving on with the new. Now, I have the other charts hidden in the background. I just have this one full screen, and I'm gonna go over micro NQ from where we opened in Asia, how price delivered after midnight, and where you're seeing majority of your trade setups occur for this day. Now, this is price on the 5 minute. I usually look at price for entry in between the time frames of the M1 and the 5. Really, I just drop down to wherever the market structure looks the clearest, and I take entry in that trend direction based off of where the higher time frame is going. Such as the 30-minute, hour, 4 hour, and up. That is the direction that is being traded into, and we want to see price, of course, come against us initially, for us to get that participation in the direction that we want to see price push down into. In this case, we were bearish into trading into a particular level, and after that bearishness died out, we pretty much went bullish and that structure changed. So let's go over where those changes took place. So this is how price looks on the 5 minute. Again, just going over the midnight opening price and what we did in Asia. We opened up on Friday bullish, came up here and made the high within Asia session. Once we made this high up here within Asia session at 29,647.50, we got the high on the day being made up here at 5:35 in the morning. Nice. So dragging that across, because this later does become, less important as we trade through this repeated level. But once we got that first reaction away from that data high, we got another displacement of shorts going down into this 3 minute order block. So the data high was formed at 29,668 flat. That was at 5:35 a.m. Now, from the establishment of that higher high, the market created a lower high here after snatching itself back up um, within this range here that is being identified from the data high and dragging that across to this low here that was established at 29,517.50. So within this range here, prices, doing something known as accumulation. The market is setting itself up to displace in its area of choosing, whether it's going long or bearish. And in today's delivery, the market was bearish. So we came out of this range after reaccumulating price, market orders for buys and shorts gyrating back and forth, and sellers were the one who pretty much won that battle. And we get a break out of this range. I like taking it from volume nodes, but really, if you're a wick to wick trader, then you would be looking for a price to break through that wick. Once I see the volume break at 29,530.25, I would execute a sort at that level and take it down below to any other areas that I've identified for liquidity based purposes. So money is magnetized here within this area. We get that complete breakdown around 8 o'clock. The entire 8 o'clock range we expanded bearishly. So if this is the opening here of the 8 o'clock, we come back and retest this order block. Price sends. This low here gets broken. We come back up and retest. We short off, smash through that low, that volume at 29,534.25. It's been cleared and price is continuing to expand in the range down for the rest of that 9 o'clock range. Well, 8 o'clock range, sorry. Now, going off into the 9 o'clock window, notice how we traded into that 30-minute OB here at 29,631.50. Just to give you a nice visualization of how this looks on the higher time frame off of the 30. You see right here, that is that down close candle and the activation of that orb here at 29,361.50. And then of course, it's not the midpoint of the candle's range, but I'm pretty sure it's just an efficiency here being marked up from the 15-minute. I have certain time intervals showcasing certain things. The 15-minute imbalances are only on the 15-minute chart, so that is what you're going to be seeing here if I do decide to hop on the 15-minute chart while doing the study for this video, case study for this video. So we traded into that 15-minute imbalance within the 9 o'clock draw downwards, magnetizing ourselves into that 30-minute order block, bullish one in this sense. And we come and we trade down into this 15-minute imbalance, pretty much just reclaiming everything on this down move here at 9:30 into trading into the data low that was established at 29.61 flat. And we make the low on the day at 29,231.25. So based off of that, and we're trading off of the bias of the higher time frame, what I will do, just so you can get a better visualization of this PA, especially on the M1, is I will turn the chart trader no longer than about 9:47 on the M1. And then what I would do here is add the PO3 indicator so you can understand exactly how I'm visualizing and interpreting the daily ranges. So I'm using it on the day, using midnight opening, or you can use the one from Asia. I prefer either or, but I'm pretty sure most people are acclimated to the midnight opening candle, so I will leave it there. So notice how all the levels that I have marked up here on the M1 are literally the same highs and lows being identified on the M1 chart. The reason why I do a lot of my markups off of the M1 chart is because price is fractal. With that being said, you're going to hear me say this a lot, but when price is fractal, a lot of the moves and things of that sort that you're seeing on the lower time frame, they do work. There's nothing wrong with it. It's just a lot of times people assume that they're getting drawn out by manipulation and lower time frame whipsaw, that they forget exactly how candles form, on the lower time frame to get to where it's trying to go on the higher. So this is how I trade the lower time frame. I don't trade the lower time frame to gain micro scalps into trends. I trade the micro time frame to get a better entry into that 1 hour, 4 hour daily draw of wherever the candle might be going for the rest of the day. This is how I end up getting these 100 point, 200, 300 point trade ideas in entering in off of the M1 and just holding based off of key structural levels being tagged. In a sense, a lot of my key structural levels, yes, are higher time frame focal points, highs and lows, things of that sort. But really a lot of my confirmations for exits and re-entries back into price come from institutional styled concepts delivered by ICT and that is pretty much what I use. So the link to his channel, I believe, is already attached to my channel, or you could just search up ICT. He goes by Michael on his handle. Should be able to find him very easily. He's very well known within the trading industry, at least when it comes to institutionalized concepts and teaching them for free to the public. Now, after we got the trade moving lower within that whole 8 o'clock range, at 9 o'clock, this is where we primarily start to look at the market and assess it for entry, because you want to see what price is going to do at 9:30. So yeah, we could have delivered to the downside at 8 o'clock, but you never know. 9:30 could have possibly snatched us all the way back up into clearing data highs. But first, the market went down and drawed itself to the low of the day. Once we got that move down towards the low of the day, that's when we noticed that the reaction away was very strong. So one of the key takeaways, I guess I'll talk about price, is that a lot of times you would notice the market um, do something very specific once it magnetizes itself to these red levels. The reason why I'm highlighting these levels red, because these are the levels that are coming from the daily chart. If this is the daily low, or the low of the week, the high of the day, the high of the week, a lot of times you will notice very strong reactions away from these highs and these lows. So to me, these are pretty much my maximum drawn ranges on a price swing from the data low up to the data high. So the entirety of this range, though, that is not exactly where it started from. This lets me know in the back of my mind that the market, trading from range to range bound, if we're going from low to high, is still offering me opportunity to trade within a 407 point range. Now, taking it from, the true low on the day to the true high on the day, I'm starting to get a little bit off topic, but you can see how that 407 point range trading within, you know, low to high. Once we trade and break past those low to highs, it turns from a 400 point trading range to a 528 point trading range. So it doesn't really hold any importance, because you still have to catch the move in order to capitalize on any points at all. But it's just food for thought into helping you guys understand how these ranges pretty much gyrate back and forth with another, and we don't really truly go anywhere unless we actually break into new all-time highs, or all-time lows, if that's ever possible at this point. But yes, that is how range expansions work. We trade in these compact ranges from a daily perspective, which is very big. 407 points is not a small range. You can make life-changing money just from 100 points, 50 really. And when price is trading in between these ranges, you will notice these areas of where price expands, out of the ranges. And once we catch these expansions out of these ranges, either price does one of two things: it continues to expand and go higher, or it returns back into the previous range that it left from and trades back within it, but now just at higher highs, like higher price levels, and then lower price levels, because now we've broken outside of the regular established data points from the data high to the data low, that are pretty much color coded in red, if you're catching the drift of what I'm saying. So this is no longer the data high. This high now becomes just some old swing high. This data low now just becomes some old swing low. And then these new levels here, in black, showing the low of the day, and then the high of the day after sweeping, are the new draws on the range. So leaving those black, dragging it out, and turning this off, because you honestly don't need it. Once you do this long enough, you can honestly understand how candle PO3s work, and you're just trading within those PO3s and trying to catch entry into wherever you're trying to get in sync with the delivery. You're bullish, you're bearish, you apply these concepts to bullish confirmations. You're bearish, you apply the bearish confirmations, and you rinse and repeat, doing the same thing every single day. Win, lose, or draw. Um, Nothing's going to change in terms of entries, but things do change in terms of price. So going back over what happened at 9:30, this is where the other charts come into play because I do use the other index charts to get a entire feel of what the market is trying to do. I like looking at individual indexes because they all tell a different story, but it comes out in they all tell a different story that plays out in a different way, but it all gets the same effect, if that makes sense. So, just taking these ranges and just tying them together. Hopefully, the charts are nice and zoomed in so you can see this. So, I'm gonna zoom in to the area that I had drawn in um, the yellow. This is that same range here on ES. So, I'm looking at this area and just helping you guys understand how it works. Right here, this range, very identical and very similar to what price did here. Not looking the same in sense of maybe it's turning points, but usually 9 times out of 10, the structure does hold up to look the exact same um, when trading these pairs. So more so, lower highs here, descending. You can tell that there's a decline in the first initial stages of it after we clear that volume. And over here, it's more so clutterness, price accumulating. We're not getting those consistent lower highs like how we're getting on ES, but on NQ, we're consolidating, chopping back and forth, and still break down and get the same handle. Just looks a different way. Now, stretching that over to the right until where we get that breakdown after clearing the volume node. So we cleared that node or that body, the highest body close within the range at 7446.25. You could take that level for yourself, paste it on your chart, and you can see exactly where we cleared that node and swept. And same thing here. Volume was cleared at 29,641 flat, and then we see the sweep. So we got high, higher high, higher high, three high drive, and then the market comes down and breaks lower, um, disrespecting any higher prices. It now gives us telltale signs that we're no longer bullish here. That structure is not no longer withholding. This low here at 740 is this same low all the way back here at 740. So the sweep happens here. The sweep happens here. Same leg of PA going up at 740, sweeping high, higher highs, higher high. So we sweep, and then the market draws itself under that 740 low. If you want me to be pinpoint accurate with time and trading off of the basis of time and price, this is truly how it works in essence. So, in its purest essence. So we sweep, price holds here, arranging, price holds here, arranging, and then it makes that drawdown, and then we get that expansion to the downside for the remainder of that 8 o'clock candle, expanding. Now going into 9 o'clock, this is where we see those slight differences in how the PA plans, how the PA plots out at 9:30. So I'm gonna highlight those differences into why taking shorts at this point of time was the best possible thing that you could have done, and waiting for longs. Once everything played itself out, how you could have caught that as well. But really, I was primarily just looking at shorts. I did catch this short. I held it all the way through until price ended up flipping. I honestly thought we were just gonna go lower. But keep in mind, once that PD array, well, not PD array because it's not a previous day array, it's still on the current day. But once that array was swept at 7374.75, the red level here, that is where I notice a lot of the times where price will flip, change delivery, This is possibly the best area where you would want to take your profits or scale something off before that change happens, because it usually always does 9 times out of 10. But that doesn't mean that it always happens, because you could get a trade like this and the market just keeps moving. You've seen it. We've had like 1,600, 1,500 point drops last month, where the market has just never came back, expanding 300 plus points in Asia and just keep pushing. But if you haven't already noticed the differences between NQ here on the M1 and then ES here on the M1 at 930, notice how at 930 we get strong displacement going down and we sweep this low. I'm gonna make this a nice tinted, let's go purple. So we sweep that low, right, at 902. Now that same low here at 902 gets swept as well. So notice how we have low, lower low, but we already pretty much swept that low at 934. Did we do that here? Yes, we swept going down underneath that 932 low at 934, and we create a bottom here at 934. Notice how price is just slowly but surely getting into that order block, getting to that 15-minute imbalance that's marked up and magnetizing itself to that data low. Though I don't have the 15-minute imbalance and things of that sort marked up on the M1, if you were able to go back in time to where I was at. One second, boom, boom. Go back in time to where I was at on the 15-minute chart. Visualize this, interpretate this on the lower time frame. Don't let anything else fake you out from where the move is magnetizing itself to, especially when you have very strong displacement. So going back to the M1 and now looking at the moves again, zooming out and coming back over here to ES, you see here what we did on ES and NQ is not similar at all, because what happened here on NQ at 940 was very important. Notice how here we got nothing but a lower high and lower highs continuously, expanding downwards. Price is showing us that we want to go down. But notice how here on micro NQ, where we retrace strongly back up into this 1 minute imbalance here, right into this order block here on the M1. And I like to find my order blocks within the highest proximity of the dealing ranges that I'm currently trading within, which is why this yellow shaded area is being notated from the high at 29502.50, which was the high that was established at 930. More than likely, that is the high of the 30-minute candle. Well, let me not say more than likely, it is. This 930 high here would be the same high on the 30-minute chart. You're looking at that high on the lower time frame for targeting purposes once the structure flips. And all of that is being done and notated on the M1. There's honestly no reason for me to look any higher unless I'm looking at particular things with the higher time frame. But once I see everything that I need to see on the higher time frame being showcased on the lower based off of my markups, I don't have to jump up that high, cycling through every damn time frame just to see price go up. It's already showing you it wants to go up on the M1. So trade into that bearish order block and we get a closure of this M1 fair value gap slash liquidity void, because we fill in this up close candles range, and then right at 940 we spit straight down. We have a inversion here, a little resting imbalance that we feel. Price fills that on the way coming back down, and of course sweeping this low here at 930. The same thing gets done here within 934. We sweep that low there and we continue to push down. So the pushes here on ES was so much more cleaner than the gyration back and forth on NQ. We got to where we needed to get to, which was the low of the day, and creating a new lower low close on the daily candlestick. but the delivery on ES and of course micro and Q was a whole lot cleaner, um, unfortunately. So look out ES right here, grouping. Market is consolidating, and then right at 940, huge spit to the downside. This was about 192 points off that 940 move. Um, Looking at ES as well. Sorry, let me keep NQ here. But looking at ES as well, going back to that point of time. Let's go to 930. Going back to the M1. Very clean pushes to the downside. So we didn't get that same thing here on NQ. Though the moves did pan out the same, NQ kind of did set itself up just slightly differently in terms of how its arrange broke down. See how we accumulated here, broke under that low and expanded. See how we retraced very strongly here, still some form of accumulation, then expanded, came back up and retest. This candle's low, and we shoot back down again, smashing through, getting down to the low of the day. So cool way to see how SMT divergence and chart correlation can tie hand in hand with formulating entries for yourself, and it's definitely something that you can use to your advantage when you do spot these things. Now, going off further, there's another slight difference that was noticed with price. So, notice how before we got the rally, the buyback are going up. I did not trade the afternoon session. Majority of my trading is done in between the times of about 9:30 to 11 o'clock. But a lot of the times, just trading at 9:30 enough is more than enough points, so I don't have to trade the afternoon session to make anything or force myself into trade ideas. But the range itself from 9:30, just being able to witness that and participate in it was 241 points by itself. Though the market did expand from this low of the day here, heading up for about 528 points. I don't need 528 points. Don't get me wrong. It's great to make a lot of fucking money, but you don't need that many points. You don't have to sit inside the market, for extra, hour and 38 minutes. You can literally just be done off of this 9:30 impost that pretty much took 5 minutes to deliver, and you're out of the trade. So, getting off into the buy model of the trend, notice here on NQ, I'm zooming in just so you guys can see it really clearly, how we get that break here for the first initial change in the market's direction after sweeping the data low at 29,324 flat. So we come up here. How I did it was I used a line chart. I like using line charts to pretty much notate where price is truly closing. Once I get where that price is truly closing, because it's giving me candle closures and not wicks, I know exactly what node I need to be focused on. So I know exactly where my breaks are happening. But we get that trade above, higher high, come back down, retest, and we ascend, going up and sweeping that 930 candle high, which is where our buy side is resting. If we're going to draw higher, we're magnetized to that. Then you look at all of the old levels on the left-hand side of the chart, of course, the lower highs, because those are pretty much what you're targeting. Or you can just go and, do what you do usually and just notate off 4 hour, 1 hour, 30-minute, 15-minute highs, things of that sort. And those levels become your targets, potential exits, areas of where you can scale out of your trade position, but really you're holding for those bigger levels based off of the higher time frames, such as the daily data high that is shaded in red at the top of all of these charts on every single index that I am pretty much assessing. So same thing happens here at ES. Same break, same shift, same correlation, different prices. It's the only thing that's different is the prices that's being read, and of course the weight of the asset class when you trade it, because not all money is registered the same across all these indexes. Some are higher than others, and some are lower. That same thing happens here on micro. I'm sorry, on YM. Switching back to candles, but notice where I'm identifying that break, and they all look the same. They all have that high, this range here, the trade against the retest and then that expansion, all happening here within that 10 o'clock window, which is pretty cool to see how you can see like the ranges on the line chart literally look damn near pitch perfect, the same, with just very slight differences. And sometimes seeing those slight differences would literally make and break your trade. So look, that break and that retest is a lot cleaner here on ES than it was on YM. So if I had to rate it, it would definitely be ES for the cleanness in that draw going up. And then I will follow that by NQ, and then I'll give YM. But YM's delivery going up was way cleaner, so I have to rank it ES, YM, and then NQ just because of the choppiness. But YM, it was very easy to tell it was going up. There was so much pressure in that candle alone at 10 o'clock. So, for those of you who do not know, the 10 o'clock range is pretty much the next opening of a micro, or a candle PO3 off of the higher time frame. And what that PO3 would be is the 4 hour. So this candle here is very, very strong. That is why I pay attention to the 10 a.m. candle. Just summing it up, it is the next 4 hour opening. So based upon how this candle can move, it can give you prognostication into a move either going higher or lower. So if you miss a move at 9:30, you wait 30 minutes, wait till 10 o'clock, come back, and look at what the market is doing now, and you will start to see the markets with a lot more clarity, and it doesn't feel like you're just all on the charts all day, just forcing a damn trade, trying to catch something. You're waiting for something to primarily happen first. So we get that break here, and then that P4 hour PO3 at 10 o'clock opens here. And just expanding that out so you see, so that break, that retest, we come back down to that range one last time, at 10 a.m. and we expand within that order block that was made at 9:59. You take entry here at that break, and you take it all the way up to that 9:30 high, or of course the areas, all the way from back here. If I was to go to the hour chart fairly quickly, it's not rocket science on how you identify your targets once you pick a bias, but the next high that you would pretty much target is that high that was at 29,647.50. So that high here, which was within Asia, pretty much would have been your target for the higher draw of the move, which is all the way back here. Yeah, because it shows it there, but you can use, I'm sorry, not the high within Asia. The next, you could use the one that's within the fair value gap. Sorry, I'm way too far back. I lost myself. Disregard that. You could use the resting imbalance here, for a target, or any of the lower high swings, um, off of the higher time frame. So any lower highs that you've seen, mark off those highs. Those would be areas of where buy side would be resting. But of course, since I'm trading from, within daily ranges, I'm definitely expecting that the market to draw itself up a whole lot higher than what's being seen on just that one, interval. So this blue shaded area right here, make it green, because that would become a target from the imbalance that we identified off of that time frame. And this resting imbalance was pretty much identified off of, was it the 30-minute or the 15? It can be seen on the 30-minute, but the refinement of that range right here is on the 15. So let me take away all this visual clutter right here. After that break, came back up, displacement, imbalance left to here, magnetized 10 o'clock. We get right up into that range and completely fill that. So at 10, notice how YM was pretty much the lagging indicator. YM had a very strong reaction into sweeping its data low. And one of the things I would notate about this is that we got the sweep for the low of the day on YM at 10 o'clock. But notice how we've already swept the data low on NQ, and we also swept the data low on ES at least 5 to 10 minutes before the sweep happened on micro NQ. So if you want me to give you an exact amount of minutes, we got the sweep here at 10 o'clock. Then looking at where the sweep happened on ES, so 10 o'clock it happened here. It was very late, and then here it happened at 9:49. But it did happen way earlier than that. That's why I gave like a rough estimate. So we swept at 9:43 to be exact. But I'm just looking at where the low of the day was created on every single individual index, and it was made at 9:49. This happened at 10 o'clock. This happened at 9:49, so 11 minutes apart. And then going back to micro NQ, right here, NQ. 11 minutes apart from ES, and then it was 15 minutes apart from micro NQ. So we have 11 to 15 minute point, well, not point, but 11 to a 15-minute time interval of where price already swept initially before it happened on YM. So NQ and ES in my eyes, interpret and trying to interpretate this for you guys visually, but in words, is that we've already got a sweep 11 to 15 minutes before it actually swept on YM. So we're already seeing bits and pieces of the future with ES and NQ before it taps YM, and then YM eventually gets down to dealing its business down there, and then it completely flips and it goes long for the remainder of the day. So now when talking about the long side of the market, this is where you start to notice the inverse of what the market is doing before getting back in sync with the long. So right here within this consolidation, this was about 5 to 55 minutes of a range. If I had to draw it exactly from where the range began, very first up close, I guess, within the consolidation, about 50 minutes. So we just say like all of these ranges here are about 50 minutes of where price just sat after 10. So we didn't get a next initial move until closer to the 11 o'clock macro between 10:50 to 11:10. Within that macro, price sat in a holding pattern. So notice how we sit on that holding pattern here on micro NQ, and then we sit in that holding pattern here on micro ES. But notice the thing on this holding pattern, how we accumulate going higher, but micro NQ and ES accumulate going lower. So ES, same range, very similar to NQ. They both drawed higher, swept highs, sat in a range, and then made another initial move lower before going higher. And then the YM did the complete opposite. It did not go lower. It accumulated going higher, and then it continued to sweep going higher. So the delivery on YM was just so much more cleaner into where it was trying to go. Wow. ES and micro NQ are pulling the market against you, dragging it to a certain area, enticing people to get in the shorts. Market makers are priming, and they send the market back long at exactly 10:52, and we get a very strong impulsive move going up, trading to the 11 o'clock range, and then we sweep data highs on every single chart. Now, I've highlighted certain individual moves in between, you know, the expansions, order blocks, what the market was pretty much drawing itself to before going back higher and things of that sort. Um, Not really too much talking has to be said about the other pairs. Just showing that correlation. Now it's up to you to do your homework and study these correlations with your pairs and tie them hand to hand to whatever other indexes that you do want to decide to trade. Even if you're not even trading the other index, you can still use it for interpretation of how moves can, broadcast themselves to you, and exactly what it is that you're looking for should become a whole lot clearer when you do decide to trade. So now, just going off into the ending of this, of where we're currently at now, notice how at 10 o'clock we left the orb, price traded into that orb about like 1050. We get an expansion. Same thing here. Price comes down. A couple of things with ES, 5 minute inversion. 5 minute fair value gap, 3 minute order block. And of course, this imbalance here resting on the M1, which is highlighted in yellow. Market comes down and couples into a whole lot of things down here and expands. If you like using Fibonacci and things of that sort, you can use Fibonacci on this low to the high of this price swing and maybe get some type of visualization on the retracement, some type of understanding of where it could possibly draw itself to. Wick to wick, I know isn't highly favorable, at least with the way ICT teaches it, though I think I've seen him use wick to wick confirmations on trends, but I just do it the same way that he does it and just take it from the highest node close to the lowest node close, body to body. If that is where the true essence of a candle lies, then that is how you should draw your fibs as well. So taking it from the lowest body close to the highest body close of the range, you see how right here with the coupling of the 5 minute fair value gap, the imbalance here on the M1 being highlighted in yellow, and the 3 minute order block, price trades into the 62 and the 70.5%, which for me, I've always been taught that range within the Fibonacci is literally the golden zone of the fib in a great area to buy in. So now, based off the things that I'm seeing, I'm just building and stacking upon multiple confirmations, looking at other confluences that would trust me to get in sync with these longs, and of course take the buy side out that is resting above this candle range high. And then you also have the negative 27 and negative 62, which it hits both of those projection levels on the range up, drawing itself for about a 23 point stop. And then the high on the range about 71. So a good 1 to 3 risk to reward ratio with ES. And then looking at that same leg of structure back here on NQ, just seeing how many points it played out with the trade idea in the range. Long, I usually do 50 point stops. I do 55 on this low and take it up to the high, about 348 points. 1 to 6 RR, not bad at all. It got to it just ever so slightly, 348. Still, 3 points off. That's not bad from hitting that potential target. And mind you, everything for the trade is forming below midnight opening price, which is what you want to see price do, especially when you're bullish or bearish. You look for the trades below or above. Now, looking at that same exact move and how ES panned itself out here. Looking at that same area where we're sitting at in price. That high of the range is that high on the day, or the new high on the day. And then right here, this low. So you could do the same exact thing with drawing the fib from the high of the range to the low of this range, but this is a very steep retracement. It probably might end up being like an 88.6 or something like that, which it is, taking it from wick to wick, about 88.6% retracement. So like I've been doing this shit for a long time, so I could kind of like visualize how deep a retracement on a range is with the eyes. So about an 88.6 retracement, and we trade into that. Price respects it, body closes higher, and we continue to ascend. Same shit that happened here with, the breaker structure, change in trend. Very much similar with what we were saying down here with the shifted market structure. Shifted market structure, same concept applies here. Just copying and pasting and repeating the same shit over and over again. But it trades it to that 88.6, and price expands and breaks above these short-term highs here. We sweep, boom, right here at 12. This high at 12 becomes an area of magnetization, and we sweep it again at 106 because we're bullish. So you're gonna see repeated sweeps of old price highs, and it just keeps doing it over and over again until it stops, and that stop is here. Once we get that sweep, comes back down into the range. Since we're getting closer to the end of the day, price closes here and you're done. So very strong pullback away from data highs, and our price is just sitting within this little tight range, waiting for its next dose of volume, which we do not have yet, but the market did just open 15 minutes ago. So now this is where you wait for the market to accumulate, build orders, find some type of volume within itself, news, things of that sort, Trump tweets, all type of shit can be factored into how the market can possibly gyrate and move back and forth. So just waiting now for the next possible, best opportunity into what can happen with PA. But I hope you guys enjoyed this video. Try to make it as clean as I possibly can. I don't believe this was lackluster. Could definitely give you, a lot to study, things to look at. Hopefully, this gave you like a new interpretation and understanding behind price action and how you can, take advantage of these moves and these trends and, make you some money. So, again, I'm going to try to get this done every single week for the remainder of my life. But yes, so it's day 14 of June. I've pretty much covered the first week of June, going into the second, I believe. Correct me if I'm wrong, from what I've uploaded so far. I do this a lot, so I believe I've already covered all the other trading ranges that needed to be established for this week. And yeah, that's pretty much it. So I hope you guys enjoyed, and I'll see you next time.